Assalamu alaikum and good evening, everyone. A warm welcome to the More Than Just Money series, episode 21, organized by the Islamic Finance Singapore or IFSG. My name is Azmi, and I'll be your host for today. For those of you new to Islamic Finance Singapore or IFSG, we started off as a WhatsApp group, which then became a registered company dedicated to build a local Islamic finance ecosystem for all. We organize events, conduct training, produce articles and resources for our Muslim community. Today's topic, understanding DeFi and Halal yield generation methods, will be shared by our brother Aziz Zainuddin, co-founder of ZaynFi. So if those of you have any questions at any time during the session, do type them in the chat below or raise your hands to be unmuted. We'll also have a Q&A session at the end of the session using our Slido link in the chat below. You can post your questions in the Slido link. So without further ado, I shall hand over to Brother Aziz to start the webinar proper. Brother Aziz, please.
Thanks, Azmi, and the IFSG team for putting this together. So, Assalamu alaikum warahmatullahi wabarakatuh, everyone. My name is Aziz. Just a bit of background. So, started my career in finance as an analyst and went into deep in blockchain and Web3, right? As in by creating Master the Crypto, which was basically a media firm focused on sort of breaking down the complexities of crypto, blockchain, Web3. A year and a half later was acquired, and then I sort of like co-founded sort of like Facet, one of the sort of regulated digital assets exchanges in the Middle East, where we sort of spearheaded asset tokenization and sort of like the regulatory framework behind digital assets in the Middle East, right? So after 3 years, decided to just jump on DeFi like fully, because after 3 years in centralized finance, you wanna focus on DeFi where it's all about building, creating value add in a really really new economy industry. So then co-founded StellaSwap, which right now is the biggest DEX decentralized exchange on Polkadot, Polkadot ecosystem on Moonbeam, and right now as with Shakir, we sort of like I'm one of the core contributors to Zayn, which is basically focused on halal DeFi, right? Halal Shariah. So the purpose of this sort of like discussion, right, is to sort of like open your minds towards this new industry, which I think is a great leveler for Islamic Finance 3.0. Why? Because Islamic Finance 2.0 is predicated around circumvention, and that sort of like resulted in not a level playing field where Islamic finance has been sort of like sort of viewed as less competitive than TradFi, which is based on riba. So that's why I feel like DeFi is sort of the perfect conduit or avenue for the next generation of Islamic finance evolution, the evolution of Islamic finance, basically. So before getting into the weeds of that, just like a whole like refresher, right? And what actually is the evolution of where DeFi or Web3 is, right? DeFi and Web3 basically is sort of like synonymous, right? So we had previously back in the 1990s, the entire decade focused towards the digital infrastructure, right? And then Web 2.0, you look at more retail focused manifestations of the evolution of tech, right? Social networks, mobile apps, cloud driven infrastructure, sort of like the movement towards application development, less monolithic infrastructure and more service-side application. Now Web3, suddenly we're in a new world where whatever that exists in Web2 or even Web1, right, it is decentralized, right, and that facilitates a sort of like a different way, a different architecture of way of doing things. Right, so this is where we're at in terms of this new sort of like nascent technology and basically the potential of what it entails, right? And I mean that culminates in DeFi, right? Decentralized finance. So here you can look at the sort of like the core traits of DeFi, right? Utmost is decentralization, which of course its name is predicated on DeFi, right? Decentralized finance, right? So what is like DeFi, right? So not to confuse, right? The easiest way to analyze DeFi is that previously, in traditional context, right? Um, Everything is centralized. You have banks, you have governments. At the heart of it all is centralization. And centralization is good. It's efficient, right? But obviously, it comes with weaknesses, right? Obviously in centralization, there is censorship resistance according to any agendas, or the fact that, everything is fully dependent on centralization, which means it's a single attack vector. Once it goes down, everything is compromised. So DeFi, as in, the advent of Bitcoin and blockchain, basically blockchain, the underlying infra behind Bitcoin, right? Sort of paved the way towards a new way of architecture of how systems of money, financial applications can be sort of like created, right? And at the heart of it all is basically disintermediation, right? What this allowed is that instead of trust as a structure, DeFi fosters trustless structure. So you don't have to trust anyone, right? All you have, as in, because it is run, the entire infrastructure is run by open source code, which is verifiable by anyone, right? So that is the premise of decentralized finance. I won't go into the weeds of how it works, right? But essentially, why it's called blockchain. Blockchain is basically, when Bitcoin started, right? What's revolutionary about Bitcoin, beyond the fact that it's like a new way of money, is its underlying technology called blockchain, which is essentially a chain of blocks which are immutable. Once data gets stored into that, no one can change it, right? So it's an immutable database which is distributed across anywhere around the world, right? So that's blockchain, right? Where anyone can participate in this. You can set up your own computer, download the client, and voila, you become a node, and you can sort of like be part of securing the transactions and securing data. So essentially, that is blockchain in general. Now, the main use case or utility that we see in DeFi has obviously been that we see in blockchain is finance, the decentralization of finance, right? And that's one of the use cases which has been front and center of this evolution, right? And why is that very important, and why does it have immediate utility, right? Imagine the traditional way of sending money previously, which was bank-to-bank transfers from a different geographical location, right? What that entailed was actually high fees, like 3 to 5 working days, right? Across a network of intermediary correspondent banks, right? That all take sort of like intermediary fees, right? And obviously all those are centralized databases, right? So with decentralized finance is basically peer-to-peer. So you send value in the form of, say, Bitcoin or stablecoin, right? If you're in Singapore and you send someone over in China, right? So it's really peer-to-peer, and there's no intermediary. Right? All you have to pay is like gas fees, is like what, cents, right? And within minutes, some even seconds in other blockchain networks, value is transferred in a trustless way, and where data is immutable, it's censorship resistant, right? The truth is in the blockchain, and no one can change the truth. That's a single source of truth, right? So suddenly the use case of finance makes sense, because you cut down processing times, you cut down fees, you cut down the intermediaries, and therefore you have a financial system that is free from the hindrances or the weaknesses of traditional sort of like finance. Now, so we understand that the main use cases of blockchain right now is centered around finance, and hence this case talking about DeFi, right? But going deeper into the evolution of this sort of like industry, right, where I'm pretty sure you've come across the terms Ethereum or Bitcoin, right? So why are those coins important? It is because they represent the foundational layer of what Web3 or blockchain or DeFi is, right? So how I analogize it is basically you have a smartphone app, right? Bitcoin is a single app that is perfect for a single use case, which is value transfer. Extremely secure, extremely simple in terms of design, code, and in terms of sort of like use case, right? Rock solid application, 5 out of 5. Ethereum, on the other hand, sort of like it revolutionized the way, basically unlock the potential of blockchain via smart contracts. So now, Ethereum created the first smart contract sort of like platform. So now, right, you can have a wider amount of use cases on blockchain, right? So Ethereum is basically the OS, or basically the Google Play or the iOS app store, where anyone can develop applications which are decentralized, and anyone can use decentralized applications. So you see the difference, right? And Ethereum smart contract blockchains like Ethereum opens up a wide a vector of applications and use cases, and suddenly anyone can create anything, right? So that has been the evolution, starting from Bitcoin and evolving towards smart contract blockchains, spearheaded by Ethereum, and a lot more that you see right now, right? Okay, so now, I mean, the tech stack of how this works is obviously at the heart of it. The underlying settlement is the underlying blockchain itself. In this case, if you're just talking about value transfers, Bitcoin, if you're talking about a wider applications of financial applications, or Ethereum or any smart contract, right? Then you have asset layers, the different use cases from the protocol layers and specific applications within the protocols, right? And suddenly you have a fully fledged and robust sort of like ecosystem, where one is built on top of another, right? And right now you can see, as in, I mean, the current market cap of sort of like the entire industry has surpassed like $1 trillion, right? So that signifies the immediate utility and use cases that DeFi has to offer, but it's still relatively new, and that is what this discussion is about today, to sort of like open up the eyes on this as a technology stack, and therefore we can look, based on that, further refine sort of like the Shariah components or vectors that we should look at from an investing or financial point of view, right? So now, not going into sort of like the Shariah part of things, which I'm pretty sure there has been a lot of contention, debates, discussions, which is good, right? Because that fuels sort of like the path forward into what should and could be done. Right now, as a core contributor to sort of like ZaynFi, we work with our money, one of the largest, one of the most, credible, or the top Shariah advisor in traditional finance, right? Islamic banking and finance. If you're in the space, our money, right? So the most important, there has been, obviously, we are not going to go into details about the halal haram, the fatwas, but given, sort of like how DeFi has evolved, it's important to understand how do we approach it, right? And Armani seems to be at sort of like the lead of that, in a sense that how they approach the Shariah vectors to look at the underlying components and sort of like look at the high level stuff, and then comes to conclusion, right? Where, they say that Ethereum, Bitcoin, comes as in should be looked at as commodities, right? Instead of like money or currencies, right? And so based on, this is just a viewpoint of our money, obviously. Scholars and fatwas, there's very different viewpoints, right? But this is just as a highlight to Armani is sort of like a fatwa which we agree to, right? And then one thing to note is that Sharia in DeFi is very, very basic and infant, right? Because there's not really a Sharia governance framework right now. And therefore it relies on people like us to sort of like spearhead thought leadership on how this should be looked at, right? And I as someone in this industry, right, that has always been one of the things that has interested me, right? Because I'm coming from a Islamic finance background, there is a degree of responsibility to sort of like create something which is Sharia compliant halal, right? But when you look at it, right, I mean, the whole DeFi is misunderstood, and that's why it has been misconstrued in various ways that sort of like put this in a very gray area or borderline sort of like black, right? So the purpose of this is to look at, okay, this for us is very simple, right? This is a technology. I mean, technology should and should be agnostic, right? Obviously, there it could bring arise use cases which has impermissible elements, and that is what we should sort of like look at the high level picture on what we're actually trying to look at, right? That's why I mean, if you look at literature reviews around DeFi crypto blockchain, right? It has been primarily around basic building blocks, which you can sort of extrapolate to you can really extrapolate to traditional finance when you talk about stock screening, right? So like the category of assets, looking at the project legitimacy and the absence of profit elements like lending and borrowing where there's interest rates, and this is something which I think is very cool, right? Which is smart contracts screening, because smart contracts lie at the heart of this new industry. And one thing that I truly appreciate when talking about esteemed scholars within the space that are sort of like trying to wrap their heads around this technology, right? Is that smart contracts play such an important role in DeFi, in Web3 blockchain that, I mean, and there's never been, you don't see in Sharia screening in traditional finance, right? The screener for technology stack, right? The sort of like where underlying technicalities of technology becomes a component of Sharia governance framework, which I think is very unique to DeFi, right? Because since smart contracts are the heart of this industry, therefore it entails and basically the code is the truth, right? And it's verifiable, it's open, anyone can look at it, anyone can analyze, anyone can sort of like use, right? So then obviously it entails that there must be proper way to look at this from a Sharia point of view where it is safe, where there is no sort of like malicious intent or bugs or lines of codes that aims to steal money or exploit. So you see, right, Sharia governance isn't only about whether there's riba, but I mean it encompasses a deeper and more comprehensive view on what is ethical, what should be done from from attainment of the maqasid, right? So I think that is something which I think is very important for us to look at as well, which has been often underlooked. Now, one thing going deeper into DeFi is since DeFi is financial applications, right? How you generate yields, and which is one of the core elements of now, right? Is how the yields that you get in DeFi, how can they be classified, or how can we look at it from a Sharia angle, right? So this is taken out of Mufti Faraz Adam, which I think is one of the leading sort of like scholars that that are very in tune with the evolution or the developments of this space, right? And he wrote a beautiful sort of like piece on staking, which, don't get me wrong, staking in DeFi and crypto is very hard to taxonomize purely because of the linguistical, the contextual, figurative definitions that it entails. So, and Mufti Faraz Adam sort of like wrote a good sort of like stepping stone in understand the world of staking and how Sharia governance, Sharia POVs should be looked at from a staking point of view, which he underlined here, legitimacy of financials, projects, and sort of like a token screening. Now, I think, because a lot of these tenets are taken from the traditional financial screening methods of stocks, for example, right, in the traditional finance. But the most important thing I take away from his work is basically the taxonomy of staking, right? Which right now is what you're seeing in front of you. And sort of like here, I think there's very few people in DeFi that truly understands the context or the sort of like intricacies of how DeFi works, and therefore, without that, it's hard to create a framework for us to view Sharia, right, or what is important. And that's why breaking down, having a taxonomy of staking, which is basically the most crucial part in any DeFi project, right? Because it involves how revenue is earned or how revenue is generated. I think this is basically the foundational aspect of how things should be centered around. Now, if you look at DeFi, right, there's three basic primitive ways for yield generation. Right now, the easiest that you guys will understand would be lending and borrowing, just like what banks do, right? So it's clear, interest, riba, halas, haram, right? So everyone knows this. Very easy to put this in the haram basket. Two other very important pillars of yield generation: validator staking. This is basically what you call in any blockchain, right? In order to secure the security of any blockchain network depends on the consensus layer, how the blockchain achieves consensus with all participating users or nodes in the system, and how they achieve a single source of truth. And the backend engine of that is that people are rushing to solve complex mathematical formulas to secure the system and be rewarded. So this arrangement, as what Mufti Farah said, is very similar to that of a juala, right? An agreement where a reward or compensation is given contingent on a fixed output. And that is something very cool because, validator correlated staking underlines the aspect of empowerment, where anyone can participate in securing the network and being rewarded, right? So, and that is something obviously, we have no qualms about that, because there's no sort of like there's no remnants of riba in that. It's purely, it's purely sort of like remuneration based on the work that you do, right? And one thing to take note of, right, before I go to the last pillar, there's often, in DeFi, there's often been sort of like misnomers of like, oh, interest rates or the yield rate, the ROI. That has often been, okay, the validator staking, you get 5% APRs. People just equate that to 5% interest, right? So that, I mean, although interest rates, what I'm trying to say is that if you hear of like the interest rate, I mean, think of that as like, I mean, that is basically lingo that makes it easier to understand, but it may not necessarily be predicated on lending and borrowing rates, right? It could be very well the sort of like inflation rate of a blockchain network that is for the purpose of incentivizing those with validators, right? So that's just one concern. And something which I'm really, really interested in, and where I'm working on as a core contributor to ZaynFi is focusing on DEX liquidity, decentralized exchange liquidity. So what essentially does that mean? Very simple, right? If you have any cryptocurrencies in your wallet, instead of keeping them in your wallet and sort of like basing them on a capital appreciations, right? Why not you put them into work by providing liquidity to any DEX, right? And what this does is that it creates sort of like a win-win situation, right? So you provide your coins to a decentralized exchange, and those who trade on the decentralized exchange will use your liquidity, and as a liquidity provider, you will be rewarded. So you get a share of the trade fees. So basically, this is like musharaka, profit sharing, right? So that is something that we are really interested on, because the very basis of DEX liquidity provisioning is akin to market. If you're familiar with the role of market making in traditional finance, it's just decentralizing that role instead of of a centralized market maker with billions of dollars to market make and provide deep liquidity. Imagine that being broken down into decentralizing that into many different users, right? And they get paid in terms of trade fee, revenue sharing, stuff like that. So that's all that is, right? If you look at the differences, it is basically the same function in a traditional setting, but the only difference is that this is the decentralized version. Instead of a singular entity, it's broken down into different users. Now, and that's where, if you look at if you just look at this simple taxonomy in terms of staking, right, which is one of the key tenets of DeFi, how revenue is generated, you can easily see, right, okay, how these are the ways that yields are generated. It's pretty easy to score, as in to look at those that are sort of like, has prohibitive elements like riba, right, from lending and borrowing protocols. But it's also easy to look at, for example, decentralized exchange liquidity provisioning, which is basically the same function as a market maker in traditional finance, which is totally fine, right? Obviously, I mean, if you want to get more technical, obviously minusing all the leverage or all the sort of like yeah, all the leverage sort of things, right? But essentially, with DeFi, I mean, looking at how yields are generated in a way, and then just looking at it, we haven't even gone into sort of like, is this coin halal or haram? Is Bitcoin halal or haram? I think it's very important for us to look at the high level mechanics first before we sort of dive deeper into uh, the coins itself, right? Because that's how traditional finance works. Right? You look from a high level, and then the screen is created on the way down. So yeah, so that's how how liquidity sort of pools generate returns on a high level, right? You get rewarded because you provide liquidity, which is an essential function of an exchange, right? And obviously, on an exchange, people have to pay fees to swap or trade, right? And that, as a liquidity provider, you get a portion of the fee based on the amount that you provide liquidity. So the beauty about DeFi is that the majority of revenue generated goes back to the liquidity providers, sort of like underlining the empowerment effect, where profits are distributed, you know like the quasi socialist and the capitalist system like Islam sort of like focus on, right? If you look at 7th century Arabia, and that's where I feel it fits within the maqasid, or I mean, that to me is one of the best representation. Because case study FTX, you look at all this, oh, crypto is bad, FTX, all the centralized exchanges, Celsius, all those are not DeFi protocols. If they are DeFi protocols, we can sense them from a mile away, because everything is decentralized. So you can see the books, you can see the debt positions, you can see where value transfers go. But all of those that happen, and not only that, you extend that to banks that fail, right? All those are centralized banks, which are black boxes. If all of them were decentralized and transparent, things wouldn't turn out the way they were, right? So the importance of why we're in this industry to build a future where things should be decentralized and things should be transparent, and things should be to foster empowerment across everyone, right? I mean, even the unbanked is a power, or it's a value proposition that is so it should be innate, but it isn't, because we are so used to centralization and efficiency, right? So I think that's a very cool use case of that. So on a high level, I mean, this is just how I mean, we're working on, and also a lot of other DeFi protocols work, right? When you talk about focusing on liquidity provisioning from the DEX, it's very cool to understand, right? Because all of this happens via smart contracts, meaning that all those are automated. So those smart contracts are built with lines of codes that we input, right? And then all of those are automated. I mean, that's a technological sort of like leap, right, in terms of what we have today, where all is basically the blockchain is like living and breathing on its own, because those smart contracts are live, right, and they operate based on what has been hard coded then, and therefore whatever operations that goes in, that is picked up is executed, and that's why when you talk about finding the most suitable venues for opportunities for the best, most lucrative liquidity pools, automating the investments, automating the reinvestments, right, to compound. And compound, I mean, compounding in terms of reinvesting your yields, right, to maximize your output, your returns, right, and then sort of like automating the distribution to various parties. All of that is done on the back end by smart contracts, which is super, super cool. And that's what that's what sort of like is at the heart and center of this technology, where you see, we haven't even talked about token specific Shariah guidelines, because it comes later, right? The most important thing is understanding the structures, the high level about how things work. And then it's very easy for us. It will be much easier for us to make an informed decision on, okay, what should we look at? What does the Sharia governance framework should be predicated on based on the foundational structures of DeFi, right? So this is, based on the previous slide, how opportunities are sort of like viewed, or are optimized, or sort of like selected, right? And that is where it covers end to end, from a Sharia point of view, from a technology technicality point of view, from a finance point of view. So this is something that obviously, would be good if you guys want to go in depth about how things work. But what I think is very cool is that how one of the value propositions of Sharia, DeFi, in terms of spearheading a new paradigm of Sharia governance, is in the comprehensiveness, or the ability for us to look at things into totality. What I mean, usually Sharia governance framework has been around yield generation methods in traditional finance, right? And whether there are sort of like impermissible elements from a financial point of view, riba, maisir garar, right? But what do you see in traditional finance that sort of like accentuates that, right? A more deeper level of Sharia framework is you look at ESG, caring for the environment, right? So those are ancillary sort of like things which work towards the maqasid, as in the maqasid of the Sharia, the goals of the Sharia, right? And where I feel in DeFi, or this new revolution, or this new technological advancement comes, is that the importance of the financial point of view, the importance of the technical and technological point of view, right? We could easily create a framework that encompasses everything, right? And not only the traditional Sharia framework of the prohibition of elements, you remember guys said Gar and Maisir, but it could sort of entail much more than that, from a technological point of view, which hasn't been discussed, right? Because that has often been a non sort of like a non discussion, or non-element within the Sharia framework. So having that is of course a very interesting affair, where then you can see, okay, you know what, in the protection of the Sharia, right? As in, does technological factors come in place, which in DeFi it does, right? Because that's the heart of it all, right? And therefore creating a governance framework around that would be a very interesting mix to see, to cover right? And then and then set us the expectation or establish the standards going forward on that. And hold on. Oh, I think that's it. Yeah, that's it. So yeah, what is the time now? Yeah, it's basically 40 minutes already.
Yeah.
And yeah, I mean, happy to open up to others with regards to DeFi. Sure. Any questions? I'm pretty sure this is a very sort of like what do you call it? A widely debated and discussed topic. And feel free to sort of like ask any questions or any being very critical about this is very important, by the way.
Thank you, Brother Aziz, for the very comprehensive presentation. We'd like to open the floor for any questions. We also have some questions on Slido. So you may ask your questions on Slido, or you can just unmute yourself or raise your hands and ask the questions to Brother Aziz. So I will wait for about 1 minute. If there's no questions, then I will go to Slido to ask those questions that are on there. Okay? Okay, we have about 4 questions on Slido, so keep your questions coming in. Okay, in that case, I will request to share my screen so that I can cast the questions to everyone. All right, you guys can see the questions on the screen. Brothers, can you see the questions? Right, it's good. Okay, there's only 4 questions for now. Let's just go in order. So the first question is, how do we onboard the Muslim population into DeFi when there's already like difficulty in onboarding people onto crypto?
I think one one of the things with new technology is that it takes time to open up, right? And obviously the e I mean, this is around fintech in general. How do you onboard retail or the masses to simplify their lives, right? If you talk like half a decade or a decade from now, previously, right, when you talk about will users have their banking apps, or applications that are now using, right? How those are sort of like evolve is through simplification, and that's the core of this answer is basically simplifying the user experience and simplifying the value proposition of DeFi because it's really complex, right? And that's one of the things that DeFi has to work on is simplifying the value proposition because I mean we're in this industry so we know the value proposition, but communicating the value proposition could be a challenge. So for example, right now, if you're earning, I mean, you put your funds in your POSB, and you earn what, 0.01% a year, right? Those are stable. I mean, those are what you call stable currencies, SGD, right? But, if you look over to DeFi and, there's a sort of like one of the most popular ways to earn is stablecoin staking, where you stake your stablecoin, which is USDC, USDT, which are backed to the US dollars or even any other currency dollars. And those are stable. Those are not volatile cryptos, right? Those are cryptos. Those are stable coins, right? But you can earn anywhere between 5 to 10% staking the halal way, which is the yield generation or P. That is something which, I mean, the only prohibit sort of like hindrance is understanding how it works. And that's a steep learning curve. And that's why the new wave of DeFi to onboard masses would be focused or are currently focusing on really simplifying the user behavior and maybe abstract the complexity of DeFi so that they don't even know that it's DeFi, right?
Yes, I think that's a very good. I think that's a very good answer, by Brother Aziz. So it's simply making the process of onboarding less frictionless. We understand where the users are coming from. We try to accommodate to them and try to make it like they don't seem like it's a hurdle for them to adopt this technology to their use. So okay, next question is how does DeFi help with lower income communities?
That's a good question because that's a multifaceted question. Because when you talk about lower incomes, right, there are various segmentation based on uh, the economy, developed countries, social status within each community. But in general, right, one of the main tenets of DeFi is aiming towards the unbanked, right, where the traditional sort of like metrics of onboarding, where you have to have a credit score, where you have to have all these things set up, and where fees are prohibitives, right? All those are addressed or mitigated with DeFi, where you don't see excessive fees. You sort of like, the barriers to entry is very low, right? And and most importantly, I think very one thing very important with regards to low income sort of like community is when you talk about um access, right? It's relatively simple to open up a wallet and to get crypto. Sorry, one of the main things, that you see time and time again, right, is countries or as in people turning to Bitcoin for value preservation. This is ironic, but you can see it in Argentina, you can see it in Venezuela, you can see it in places where their national currency has been depreciating, like Turkey, right? And that's unfortunate because uh, Bitcoin is a hedge against their own native currencies, right? And that's where you see the value proposition of something like Bitcoin or any, or even a stable coin for that matter, where a stable coin is accessible from anywhere from around the world. You don't have to um, have USD in your bank account, right? You can just access it through a crypto wallet. So the access points and the approach to that I think is very important when you look at crypto overall.
Okay, good. Moving on to the next question. What is the difference between staking and yield farming?
That's a very good question because yield farming is part of staking. If you look at the taxonomy that I shared earlier, um, staking essentially means encumbering your assets, right? Locking your assets, right? And yield farming is a way to do that. When yield farming is basically uh, farming your yields, right? How do you get yields in return? It could be in the form of, it's usually associated with liquidity provisioning, yield farming, um, which is a subset of staking, right? Because the other two are sort of like validated staking and lending and borrowing staking, which are, I mean, it is often sort of like sort of grouped differently. But yeah, as in staking in general, is a general term for encumbering your assets. And yield farming is more custom or more specific or contextual towards liquidity provisioning on decentralized exchanges.
Okay, thank you, Brother Aziz. Moving on to the next question. What is the Halal platform to get return in staking of digital assets?
Okay, so Halal platform is it's a very it's a very I mean you can't label something as a halal platform. You go you go to any brokerage that you want to buy US stocks with, right? You don't say that brokerage is halal or haram, right? Because brokerage is agnostic. It just offers, it's like a supermarket. It offers everything and anything, right? And what should be the question would be how do you seek out halal investment opportunities within DeFi in terms of staking your digital assets, right? That's the way. So then you look at the underlying structures, for example, whether it's lending and borrowing, related to staking or liquidity provisioning index, and from there you look at individual assets, right? Okay, is this project token based business model based on something prohibitive, interest or basically have a lending or sort of like predictive markets, which is Garar, right? So having a top-down approach, looking things at a high level, and then going deeper into the mechanics of project specific is where you look at, because the underlying platform, just offers a lot of things. You just need to know whether it's halal or haram. The easiest way, obviously, is having a protocol that says we only whitelist halal stuff, which is what we try to do. I mean, that's much easier, right?
Yeah, I guess it's always easier to have someone to whitelist or like help you scan for things that are halal for your investment. And what I get from your answer is also that we shouldn't the way that we ask if something is halal should be more maybe we need to look at the way of the mechanism of how staking is in progress. Like what you said, if it's from raw element or if there's element of riba, then that's if that is their basis or model of making or staking, then it should not be something that is permissible. Okay, so moving on to the next question. ZaynFi is using the Binance Smart Chain, BSC, which many scholars said it is impermissible to use and utilize. So what is ZaynFi's view on this?
So, okay, two things. I mean, firstly, right, Binance Smart Chain is a blockchain, and a blockchain is based on an decentralized architecture, which is based on smart contracts. Binance in itself is an exchange. I mean, they could sell, do leverage, generate riba, whatever it is, right? But having the bifurcation is important because those two are different entities. Now, if you look at any blockchain network, whether it be BSC, Ethereum, or Polkadot, right? Looking at each the networks to see, okay, what is the pillars of it being impermissible. I find it very hard to understand that a blockchain network could be sort of like impermissible because it's technology and technology is agnostic, so maybe what you put in the technology or the applications that you derive from the technology, like on BAC you create a casino application, obviously that's clear cut, or you create a money markets fund, obviously that is not permissible. But saying that the underlying, it's like saying the internet protocol is haram, right? Or are we saying applications like internet, some are haram? I think it's very important to understand the context or even the scholars in looking at what specifically, because if you look at a lot of these contentions, right, you see that, the ability for it to induce or foster bad as illegal activities, money laundering, blah blah blah. I mean, as in traditional finance. I mean, if we were to use the same yardstick as traditional finance or cash, for that matter, then that should also be haram, right? But obviously, I understand the viewpoints of scholars like in Indonesia, right? They say that Bitcoin is haram, and the reasoning behind that, and that talk to a lot of people on that is less of a technological issue or even the foundational issue of the technology, but more of maslahah, right? By opening the floodgates for betting or access to extreme volatility without proper risk education or mitigation strategies, which would obviously hinder or compromise the well-being of the masses. I mean, that's totally fine. But if we were to say something, and sort of like a technological network or infrastructure is haram, I mean, there must be, it must be some solid ground, right?
Mm. Yeah, I really resonate, or I really I really understand the point where you said, or you compared to the internet, whereby we cannot just say internet is haram just because like there's some application that is being used for non-impermissible or impermissible activities. So we cannot just say the internet is haram just because of that. So likewise, we cannot just say that a blockchain, which is a technology, is haram just because another use case of it is being used on it for impermissible reason. So okay, let's just wait for Brother Aziz to come back. He might be busy for a while. In the meantime, for those of you who have not or have yet to ask questions or have some dying questions, you can please ask your questions at the link in the chat below. Okay, so Brother Aziz, is it still okay for you to answer questions?
Yeah, sure. So yeah, so I have a newborn as in a few hours ago, so I have to put him. Sorry, yes, and
Yeah. If you want, we can take a break for a while.
no, it's fine. As in, we have 5 minutes left, right?
Okay, yeah. Okay, let's go with a few more last questions. So next question is, where can we find resources needed to identify whether crypto is Sharia compliant?
Oh, that's a good. You can, as in, there's a lot of neat resources like Islamic Finance Bureau, where they have looked at it. Or if you want a deeper academic sort of like overview, you can look at sort of like papers. You can just Google the papers from, say, um, the Sharia Bureau, as well as Armani sort of like working papers, that talk about in depth about how they get the Sharia sort of like reasoning. For example, Bitcoin and Ethereum, those are two main things. But for a more practical side of looking at, oh, you want to invest, like stuff like Islamic Finance Guru is really helpful to look at projects or coins that based on their metrics that they've identified.
Right, it's good. Okay, maybe let's just take two more questions if that's okay with you.
Yeah,
So
sure,
the
that's
next
good.
question is, how do you manage withdrawals if the coins deposited contribute to the liquidity pool? Okay, I'm not sure if it's a complete question.
Oh yeah, I think to summarize the question is that the recent SEC clampdown on say staking avenues, right? How will that affect DeFi, right? So I think it doesn't affect. I mean, it doesn't affect DeFi, but it really affects centralized exchanges that offer staking as a solution, right? Because DeFi in itself, I mean, uh, because most of the exchanges, if you look at how the SEC is trying to look at things, right, it is more the relationship between the investors and the centralized exchange rather than investors and DeFi. So I don't think there is any, because proof of stake staking innately is basically just securing the entire blockchain network, right? And anyone can access them, right? But if you go through a centralized exchange, obviously there's legalities in terms of the agreement between you and the exchange and how the expectations of uh, the client funds are routed, stuff like that, which are often quite gray in centralized exchanges. So that's one of the key things that we actually sort of like support.
All right, we have a hand from Mr. Raj. Mr. Raj, would you like to unmute yourself? Hello, Mr. Raj.
Yeah, I think I've done that. Can you all hear me?
Yes. Go ahead.
Yes.
Hi. Just like I thought I've unmuted. Just a minute. Can hear me? Yeah.
Yes. Yes, we can hear you.
Right. Good. Right. Aziz, the question is this, right? Now, somebody has contributed towards the liquidity pool, right? And then if there is when you trade a pair, and then if there's a larger than required withdrawal, will there ever be a circumstances where you do not have those assets available?
Got it. So the way decentralized exchange work is an innovation of automated market making. Basically, they automate the market making mechanism, right? And therefore, in a pool, there's always two sides of the pool, like coin A and coin B. If the demand for coin or either of this coin is so great, right, it will cause an imbalance in the pool that results in the price distortion, right? And therefore, those assets will be priced accordingly based on the large orders. So what that means is that, there will still be, it will just have a price, sort of like a price variance that is so high that it causes crazy slippage to the one who did that, right? And therefore, obviously, arbitrage will come in to sort of like make the pool imbalance, right? So to answer your question, right, as in the expectations of withdrawal in this case is different than this, like the traditional form of withdrawal where you withdraw from a centralized, like you withdraw from POSB or you withdraw from, or even a central exchange, because those are custodians and they must ensure that user funds are always there if they want to withdraw. But if you talk about a decentralized setting where a user actually, as in, interacts with the smart contracts, right? And therefore, the smart contracts is sort of like foolproof in a way that it is non-custodial. So whatever you trade, right? Whatever funds that you trade with, you get it back. You won't get it back. It's non-custodial. It's just a swap, right? So no one custodies anything, and there will be confirmation of that transaction, or basically no one can sort of like custody your asset or steal your assets. If that makes sense.
Thank you. That was very nice.
Thank you, Mr. Raj, for asking the question. So I guess we are left with two more questions. Brother Aziz, I'm going to let you choose which one you're going to answer, or which one you think is easier to answer in a different method. Like you can be in the written form that we can send out to our participants later. So I leave it up to you to the questions that you want to answer.
Yeah, sure. You can just sign up for ZaynFi. We were doing a private beta now. You can just Google ZaynFi or Zayn.fi, and then you can have a look at what we're trying to build. But the last one is very sort of like is deep, right? Anonymity. So, okay, this is a very philosophical sort of like thing. All of us in DeFi, we believe that privacy is innate, should be innate, right? And obviously, all of us knows the weaknesses that happen in traditional settings where, user identities are compromised, are stolen, are hacked. Well, we all know the case, right? But with DeFi, the most sort of like weakness in people saying that anonymity is an issue, right, is because money laundering, criminal activities, which happens in traditional or any other ecosystem, right? So the premise of say interacting with DeFi, first obviously on your own, as if you have funds and interact with DeFi, obviously yourself the sources of your capital. But if you have to say, okay, I interact with a decentralized exchange with all these smart contracts, and the question I think is get towards how do I know that they are not from sort of like illegal money or stuff like that? That's a valid question, in a sense that you probably wouldn't know, right, if these funds are used for non-halal sources, and because that's the way it is built, where privacy is something that is safeguarded in DeFi, because that's just how it works.
Okay, I believe that's the end of the questions and answers session. Thank you so much, Brother Aziz, for spending your evening with us, and congratulations again for your newborn. And okay, with that, I will close the session. Okay, So for those of you in attendance, you can explore ZaynFi's beta platform. The link is down in the chat below. And besides that, IFSG has 2 further events, a networking session next Tuesday, and also the 4th run of the Core Foundations to Islamic Finance delivered by Dr. Haziq on the 16th and 17th of March. So the link will all be posted down in the chat below. So there's nothing else. We close the session with Tasbih Kafara and Suratul Asr. Right. Thank you, everyone. Assalamualaikum warahmatullahi wabarakatuh. Good night.